Hey, good afternoon, everyone. Thanks so much for coming in. Um, we're going to go over our upgrades, go over the trades, and I'm going to do a much more detailed explanation of the signals. And we now have the crude dots, both the X's and the dot themselves, but we just call it our dot system, and the quants. And what I wanted to do was first start this way to show you, I think, what are the core ways that we should look at trading, because this is what I've been noticing. If this is the 50, and let's forget for a second whether it's sloping up or sloping down. You're going to have price come through like this. Let's say it's coming down. It's going to hit on that first test. Let's make the assumption you don't know what direction that price is going to go. Yeah, it may go right back up, or what it may do is come down, hit, so what you want to do is you want to look for a retest of the 50 and then the move up. That is the safest way to take a trade, because what's going to happen is sometimes price is going to come down, bounce, and then fade. And you don't know what's going to happen here. And if you get caught on this short bounce, now the quants and the dots are obviously going to help you tremendously determine whether you're going to get a long bounce off the 50 or a potential sort of a false bounce here and then just a continuation short. But if we just look at price action alone, let's create an anticipation for ourselves and what we're going to be looking for on the trade. So without any indicators to help us, we're looking for a double test, and then, we have a much more assured, we have a much greater degree of assurance that we're going to get that move up. So this is on a trade where we're looking for it to continue in the reverse direction. It comes down, hits the 50, goes long on a double test to the 50. You don't take that first test, and you could lose the trade, but you'd rather lose the trade than take a risky trade. And without any indicator analysis, we're going to look for the second test and then the bounce. Now, let's take a look at a trade that comes through and just breaks the 50. We can't chase it. If we do, we always run the risk of getting caught in a pullback handle that takes us out of the trade, and then the trade continues down its merry way. So what we always do is we right in this area here, this is the toughest place to take the trade, where price is just crossing the 50. Because remember, it's either going to bounce and roll, or bounce again and continue up. So you gotta wait till price declares itself, or you're gonna get caught up. And again, this is without any indicator analysis. And by far and away, when price is right at the 50, which is right back to the mean, that is the toughest spot. So here's what we're gonna look for on a move through. So here's price. And we cannot chase price if it barrels through the 50. Now, what we're doing here is we're making the assumption that we're not going to take any counter trend trades, which may not always be the case, because you may get a great setup here. But what we're looking at here is to make an assessment of what happens when price comes here. So if price pushes right through the 50, we're going to look again for the pullback into the 50 and the continuation down. So on the bounce, we need a double test. On a move through, we just need a retest and the continuation. And what's really important to know is that retest can simply be a wick that shoots out of the trade and comes back and touches the 50 or traverses the 50. Remember, these are big candles. This can be a 5-tick candle body and a 7-tick wick. Which is big. That's all you need to have the move down, the pullback into the 50, and then the continuation. So now, we're just keeping that in mind. Let's take a look at price. And first, let's do it on the E-mini. And let's do it from today. Now remember, I had to close the workspace, so everything has changed just a little bit. And now we have all the indicators in place, so it helps us trade. Now here is the open at 939. Now there are no dots here to confirm the trade. Now what the dots are looking at, and I'm going to show you that the dots look at different things on different markets, and I'm going to show you that the crude oil dots are configured differently than they are on the E-mini and they are on the Dow. Now, eventually, we're going to sell these systems by market because they're so complicated and they're so difficult to create. And unlike almost any other software system, you can't just dial in, like when you're on the E-mini here, you can't just dial in the NASDAQ and you can't just dial in the Dow or dial in the Russell. Every one of them is a unique workspace that has all different indicators. So we'll probably sell them in batches, but almost everybody in the room has the system. And you guys, I think, are lucky because we've offered it, and you're going to get every add-on, every upgrade, and every market that we make. And what these on here, I'm going to type it on. So if you review it and on the video, you have two sets, both lines, and they're both looking at the same two markets. On the E-mini, they're looking at the NQ, and they're looking at the Russell. I don't know what ticker you're going to use. Doesn't matter whether it's the RT or the TFY, but those are your two markets. And they're looking at them on two different Renko multiples. One's faster, which are the X's, and one's slower, which are the dots. So if you take a trade in the direction, when you take a long trade on the E-mini, and you have a multi-time frame, and when I say time frame, I mean Renko multiple. It's two Renko multiples. And the higher the multiple, the longer the time frame. It's going to take longer for the Renko candle to be created. So if you do, your likelihood of getting a winner are significantly higher. So I also want to mention the background bias. We've adjusted it as best we can, but the Renko is fast. This is looking at the multi-time frame trend, this background bias here of the E-mini. And the cyan color and green color are the most powerful. And I'm going to explain visually what those different colors mean on both the up color and the down color, because it's the first time that I'm ever going to show you exactly what the dot system is assessing. I've always talked about the NASDAQ and the Russell trend, but it's much more than just the trend. So before I do that, though, I just want to show you that what a great trade you had here. And this is exactly what I was talking about. I don't think you could get this move up, this counter trend trade on the oscillator signal. I see a lot of yellow here. I don't know what was happening in real time. You are trading right into the VWAP here, the value weighted average price. We call it the half-back line, but it's a strong area of resistance. I wouldn't have taken the trade. You're not going to get the dots till here. But look what happens. And this is just what I was talking about. Price, whoops, sorry, it's the wrong. Price comes through right here. And then what do we look for when price comes through? And I'm going to set this to black as a default so you can see it easily through the colors. I could find black. Set default as black. You look for the pullback, and you get it right here. There's that wick that comes back into the trade, or comes back and traverses the 50. And you know that you can take a trade on an up trade with a big lower shadow. So there's your perfect entry. Your move through, your pullback in price to the 50, and then your continuation trade. And when you take the trade, now I suspect in real time, you would have had both dots. It doesn't seem like on a trade that's continuing up, you'd lose a dot. So I believe you have both dots. It doesn't make any difference. You're going to take this trade anyway. And this is a very, very big trade. And this is a very low risk trade. Now, I know for a fact, because I checked, you had triple quants here. So you had a killer entry here. And this is the kind of trade, if you miss, you're going to cry about it later. But all three of these lines are green. And you had the pullback, the break and pullback, and 2/3 of the candle is above the open of the session. So the session is acting as support for the move up. So you don't get another wick based on our ATM to take you out of the trade until you're here. I have 4.75 points. That's a $350 trade. There's no way you can lose it, because there's no lower wicks, unless you're like me and you probably meddle with the stop. But if you leave the ATM the way it should be left, it's always going to trail the trade by 8. Excuse me. And this is going to be a full winner. Then you absolutely have the opportunity to go right back into the trade. This is going to take you out on this wick. You're not overbought, and you're trading very close to major support. And the major support is yesterday's close, right here. And I know a lot of traders were asking me what these lines are. This is the session open. This is yesterday's session close. And this is our halfback or value weighted price. Now, the wick doesn't come right back down to it, but it's awfully close. And you've got another nice trade. Now, we've been getting a lot of slippage on crude, but really no slippage on the E-mini. And you got 1.75. Now, I think it's a little bit gutsy to go in that third time. And let's take a look at the difference between the 15. Whoops. Let's see how far we are. We know 6 points is overbought. Right here, we're 6.25 points off. So it would be very, very risky to take this trade. On a statistical basis, would not take that trade. It turns out to be a winner, but it's a very high risk entry when you get into the trade. And this is going to be about a $200 winner, and this is a $350 winner. This is a 500 plus formation. Just putting the break, retest, continuation, and actually this comes back and takes you out on a break and test of yesterday's close. Even though that wick isn't quite right there, remember this is not a line, it's an area. So it comes close to the support and up you go again. Now you have an opportunity here. You have no area of support, which isn't that important. We've already broken this pivot. It's just that you are significantly overbought. So you've got great trades here on the move up, just using the kind of pattern that I had said. Now on the counter trend trade right here, you really do have one heck of a nice trade. And like I said, you don't get very many counter trend trades like this because you have a confirmatory dot. Now the X is the faster of the two, but they're confirming that the Russell and the NASDAQ have also turned down. You have the oscillator signal, and you have the key intermediate quant looking at order flow and money flow, and you have the minor, which is absolute icing on the cake. So you have yourself another really, really nice winner here. And this is going to go 1.25. And you absolutely can take this trade as well. And that's going to go more than 1.25. So right here, you should be done. Now here's where you have the problem. And this is what I wanted to, now in real time here, here's the oscillator signal. Now I don't know if you have the intermediate quant here. You could take the trade, but you're trading right into the 50. And this is where, obviously you have no long trade here. Remember I said you need the best way to trade, forgetting the indicators, is you have the move down, you have the hit, you have the move up, then you have the retest of the 50, and then you have the move up. You never get it. So you don't have a long trade, and the quants totally censor the trade. You have no confirmatory dots. You do have the 3 line, but you need more than that. The 3 line's mandatory, but you need all the other stuff too to help you. You don't have it here. You have no trade, no loser. Now here, let's assume you had the 3 line here and you had the intermediate quant. I still think this is a very, very high risk trade because what you're looking for, I don't want to get caught on these trades anymore, is you want to take the break and then you want to take the pullback. I hit the wrong key, but I can still leave it. And then what you want to do is you want to take the continuation. If you don't get that pattern, let the trade go. If it just slides all the way through, if you have confirmation of the short right here and you're trading right into the 50, leave it alone. You have 1, 2, 3, 4 very low risk entries, and you're out with $700 or $800 right here on what you've got from this morning. And of course, I rarely risk a session. Don't make a session. And this morning, I did not make it. And to my dismay, I just couldn't do it, and I really apologize. I would have definitely taken that trade. I would have definitely taken that trade, and I would have definitely not taken that trade. I'm not sure I would have taken that, but after studying up all this price action, I even like the trade even more because it's got an upper shadow. And the upper shadow shows you that that's a bull failure, that bulls tried to push the market up. They created an upper wick. They failed. The bears shoved it down, and you've got the confirmatory dot. That's what makes the reentry here so nice. That's a big shadow. That tells you that the bulls really tried even harder, and this is even a bigger bull failure. And you've got the darkest color dot right here, and you can see you have 3 colors. There's the lightest color, there's the intermediate color, there's the darkest color right here. And you've got the dark, even though you don't have the slow, you've got the fast. And you're lucky to get the fast on a reversal, and you got it here too. So you probably had the ability to take this trade, but I think this is a high-risk trade into the 50, and I'm going to answer all the questions at the end that you don't want to take the risk at, because you just don't know if it's going to bounce, come back, bounce again. Nothing can predict that. I mean, as good as the indicators are, it's just the way price action is. When it hits, and this is a strong area of support. Remember, it's the average close over the last 50 candles, and so it's not there by accident. It means that this is where the power of the bears and the power of the bulls is almost the same. And this is based on price, and that's the exact same thing that happens here. And this is based on volume. This is telling you at this yellow line, the power of the bulls and the power of the bears is equal based on a different metric, volume. This is based on price. So it could still hit and still bounce. There's a lot of confirmation here, and the chances of it bouncing are small, but the best thing to do, and the most conservative again, is wait for the move through, hope it shoots up a wick, or even gives you one reversal candle, and then you get the move down. So that last move down, no matter what I saw here, I would let that trade go and not trade through the 50. I would let it move through the 50 and then see what happens. If it bounces, I'd wait for the retest and the move up. If it moves through, I would wait for the pullback into the 50 and then the continuation short. We got it here. And let's go back to the previous day and take a look at the same thing. Now here's 934. Now this is trading up. Now we're not talking about the 50. We're not trading through. I mean, at 938, this is an incredible long signal. And it's coming right off of the VWAP, which is a major area of support. Now we cooked this signal. This was the most lucrative area. We made $400 on this move. We got it here. This wick took us out. We went right back in and we rode the trade all the way up. So we had 2 winners on this move. And we had triple quants, both dots, both fast and slow, validating the trade. And there was no continuation trade to the short side. I mean, or counter trend trade, I'm sorry. Now, I don't remember what happened here. I don't think we had any trade. See, it's certainly tradable. It's just not a tradable setup. You can see it comes here. Now, if you take, it's just not tradable. You could take the trade here because it's trading off of the VWAP, off of a big wick as a continuation. And I believe that that's a good trade. Remember, this is just a trend trade. That's all there is. I just don't know what the quants were. This is a significant bear failure. Here's another significant bear failure. So you would have had a winner here and a winner here. And let's forget the counter trend trade. See what happens here? It bounces, it comes down to the 50, takes a false bounce, and then continues short. And the trade was short. I don't remember what the quants were, but that's the action. And here's a failure into the 50. You don't have the 3 line. Then you get the bounce off the 50. And then, this is not the greatest setup, but then you get the continuation trade. So it's a variation of the move through, the pullback, and the continuation trade short. It's still the same thing based on price action, except this is the first candle to break the 50. So you're looking short, you're not looking long, and you're not looking to trade into the 50. Now, I remember this trade. We had no opportunity to get into this trade. It started here. It was going up into major resistance. I couldn't take it, and there was no wick. By the time the wick hit here, this trade was too far up. I think if we scaled it, I remember I scaled it, it was 4.5 points. So technically we could take it, but this is actually accurate. We lost that intermediate quant here on this candle. So we had no ability to take it long. We're not going to get a setup on every entry. And I don't remember what the setup was here. The 3 lines obviously reversed now, and we don't have the quants, and I just don't remember how it was. So, but I think you get the idea. Now, let me explain to you exactly how the dots work and what they're looking for and why they're so powerful. I'm going to do it on paint. And why it's so tough to make them. Now, I'm going to have to use a few colors, but let's say this is the Russell. It can be the Russell. It could be the NASDAQ. It doesn't matter. And here's the 50. So remember, the dots are assessing the multi-time frame trend, and it doesn't make any difference which market it is. So what it's looking at, remember, I'm sure a lot of you remember, we have an indicator called the RL trend, which we don't use on our trading chart. And I'm telling you, I've looked at it, and it won't help us trade. I'll actually stick it in for a second. And we don't use it. It won't help us, but it does help us with the dots. Let me just find it here. Now, if anybody owns the full system and they want it, they can have it. We'll send it out to them. It's this line right here. And it's just not going to be of much value. The dots, the quants, they call the trade. And it just does not help you take this trade. It may look like it does, but remember, it's assessing price on the chart. So price isn't rising because this line is rising like all the other indicators. The line is rising because price is rising. So it looks like it's a great deal, but it's really just mimicking. It's just tracing out price. So we don't use it. I'm just going to take it off. But we do use it for the dots because we don't make the assess because it's on a higher time frame, and so it helps. So let me find the paint thing again, if I can. Let me just put that back up. So if this is our 50, and actually I can't keep this 50 flat because it's going to be hard. It's going to take a little bit of work to show you what it does, but I do want to. That's the first time I've really ever explained it. So let's take the 50, and we're going to make the 50 green. So although this is a straight line, we're going to make the 50 curving up. Now, in order to get a dot, price on a rising 50 must be above the 50. So why don't we put price right here? Now, here's how the dots work. When the modified 15 is below the 50, but price is above the 15 and the 50 on both higher Renko settings, you get the intermediate colored dot. You don't get the strongest dot. This is where you get the intermediate dot. It's light. See, I made it lighter. I don't think I can make that one lighter. But what I'll do is I'll just go over it. There's your intermediate color. Now, when the modified 15 comes above the 50, and I hope this is just not being boring. When it comes above the 50, remember the 15 cross 50 is a major event. Then the X goes to the strongest. Now, when the modified 15 flattens and becomes yellow, but it's above the 50, like this, then the dot becomes the weakest. And there's not a, I'm not gonna, I'll make a lighter green here. If I can. So that is the weakest dot. And when you have both of these in sequence on both higher Renko time frames, then you're going to get one of these three dots. So the weakest dot, 15 above 50, but the modified 15 is flat. It gets stronger when the 15 and the 50 are both green, but the 15 is below the 50. And then the strongest when the 50 and the 15 are both green, and price has to be above them both at all times. That's your strongest dot. And they're just on two different Renko settings, and that determines whether you get the X, which is the fast, or the dot in the different colors, which is the slower. Whoops. Here. So I hope you understand that now. So it's a much, much more complex calculation than simply order flow, because price has almost like a quadrant-like, there's quadrant 1 or configuration 1, configuration 2, configuration 3, and that has to be on two Renko settings on two markets, because we're looking at the NASDAQ and the Russell. So that's why the dots are so powerful on the E-mini. And when you trade with the dots, you really, really have a lot of power with you. And you could see, although there's nothing in the world that's going to stop you from getting a one-tick pullback, nothing. 23 dots could not prevent sellers from just pushing this candle down once and then resuming the trade. But when you enter on a bear failure here with these dual dots, you've got yourself a real strong entry. And the green is just the equivalent of the darkest X on the E-mini, assessing the E-mini on a multi-term. This is the equivalent of the intermediate X, where the 15 is green and below the 50, and the 50 is green and price is above both. And this color is the weakest X, this color, where the 15 is flat, but price is above the 15 and the 50. It tells you not only your bias, but it tells you the strength of your bias. So when you're trading in this green area, you're looking at two Renko timeframes on two different markets that have a 15 and a 50 that are both green, and the 15 has crossed the 50 to the upside, and the chances here of losing the trade are very small. The only thing that is very, very important is you get an optimal entry. And the optimal entry on a trend trade is right here, coming off of support on a pullback with a wick. It doesn't break support. It's a bear failure. Here, there is no support. It's riskier, and the move is extended. On a statistical basis, I would have not chased this trade higher, but it still worked. And you can see on the counter trend with the quants, and these are just the direction of the correlative markets, just the simple trend. There's no quadrant here. There's no 15 below 50. It is simply based on a trend analysis of the correlative markets. You've got the dot telling you, and it's the strongest dot, that on the faster unit Renko timeframes, the Russell and the NASDAQ are moving in the appropriate direction for you to take that short trade. Got the wick, it took you out, you go right back in, and you got 2 winners. And these are nice winners. Now here, you did get a wick here. I didn't notice that. And that may have jeopardized that second trade. And I just didn't see it. And it actually, and I don't want to, a lot of people in here are better traders than me. And this trade would not have worked. It would have given you 3 ticks because that wick would have come and taken us out. So again, it highlights the risk of taking a counter trend. This was a winner, and this would have been a 3-tick trade and not made the 4th tick, which, you know, would have left you crying. But yeah, you have to be careful on the counter trends. Now, let's just see where the market is. The market's really fading into the day. You see this trade here. This is a good trade. You're taking a short off resistance. You've got the intermediate. You've got the main. You've got the minor. You've got both sets of dots. You've got the oscillator. Now you've got the intermediate down multi-time frame analysis of the E-mini. The problem is, whoops, oh, gee, well, there it is. You have your winner right there. So it just shows that when you take a good trade, and remember, you're now below the 50. So what you're looking for when price moves down is you're not looking for the counter trend. You're too close to the 50. You're looking for the price to pull into the 50 and then roll right back to the downside. Plus, you can't take a counter trend. Everything here is red. It's either yellow or red. You're not even thinking long here. You're thinking of push, push, push into the 50 and take that first roll with both dots and the oscillator signal and the 3 line, and it comes right off of the VWAP. Great resistance to the downside. And look, I mean, still pushing down. Now, there's no wick on this trade. So you're still in this trade. Now, it's trying to break the pivot. Oh, I'm sorry, this isn't the pivot. This is the session open. And it's having trouble. So if you took the trade out right here at major support, you're doing yourself a favor. So let's take a look at crude. Now remember, I'm going to close this. Now, I mean, here's your problem with crude, and we can take a look at it right from the beginning of the day. And we start trading at 9:30, and this is a tough trade on a continuation trade. Now, what makes it great, and you have to analyze everything, is it's coming right off the VWAP, and it's bracketed. You don't know that you're going to get another area pink, but this pink shows strong downtrend. The problem is you don't have the quants. Now, I don't know if you had them in real time or not. If this minor would have pulled over, you would have had yourself a great short trade. And it would have worked great. I don't know if you had it or you didn't have it. Now I am going to be going over the auto trader trades, so don't worry about that. So I don't know. You did have the confirmatory dot, and this is doing the same thing on the correlative markets as we did on the E-mini chart. Now you'd only get to here because of the fact that you got a wick, but you've got yourself a clean first target winner. And you'll notice on the reentry, you don't have the 3 line. On the reentry here, you don't have the 3 line. So it censors 2 losers right there. You can't get back into the trade. You can't take the move long. You're sitting below a red dot, and you just can't do it. And here's just what we're looking for. The move through, the pullback, and the continuation trade. It's exactly the setup that I was talking about. And this is even a better one because it's not just a wick, it's a down candle. On the up candle, if we had the 3 line with us, and I can't tell if we did in real time, here the 3 line is in the reverse direction, but it's post trading. I had to close the chart. We would have had a great long trade with a confirmatory dot, and this would have given us a nice trade. Not a home run, but we'll take it. Now, I don't know what the quants were. I really don't like counter trend trades on crude. You have no trade here. It's sitting right below red dots. Can't take this trade. Now, short is tough because what you want to look for is the trade through and the pullback, but you just don't get it. So leave the move alone and just let it go. It's a move we can't take safely. Look how it's moving down into the 50, then it's moving down into the halfback, the yellow line, then it's moving down into a small pivot. It's moving through too much resistance. Now it's got dual dots. You know, I don't know what the quants were, but I just think this is too risky. I would like the break, retest, and then continuation trade. Here, I don't know what the 3 line was. I don't know what the quants were. I can't tell if we had a short trade. The same thing here. I don't know if we had a short trade. Here, I don't think we had a short trade because of that green dot. It's very hard to do this in retrospect, and I don't know. But here's your trade. Now, you have no 3 line here. It's hard to do this assessment. But there's your break and retest. Now, this one may have cost you a trade if the 3 line was with you, but you're going to go right back in, and this one's going to give you a full winner. Nothing can prevent these wicks. But if you go in on a wick, you're not that likely to get 2 in a row, but sometimes it happens. And if it took you out here, you're right back into the trade, and that's going to give you almost every dime back that you lost on this trade. And that's the best you can do. Here, you got to move through, and no way to get that move. Just no way. It's a shame, but you're just not going to get every move. And there's the trade. The move through, and then the pullback. Now, if you waited for the dual dots, you missed the first wick. And then you got this whole trade, or at least down to here. But that's the low risk entry. Now, obviously, wicks are a problem on crude today. It was a little choppy. I mean, these are 5-tick candles. I think they're 7-tick candles, and crude is pushing. I mean, if we wanted to take a big, actually, we have a 10-tick stop on crude. So these small wicks are not going to take us out. But this is a big wick. That would be our entry. If we took our entry here, we would have taken a loser. If we took our entry here, we would have gotten a full winner. If we would have taken it both, which should have been done, again, you get a trade-off. Now there's your roll to the downside if you had the quants. There's the wick, but you still have a first target. There's your re-entry. There's the continuation. So crude today was rough. No easy trades today on crude because crude was popping those wicks. But we would have made money on crude if we were just really conservative. And let's look at yesterday. You can look at this mess right here. This is where you can really get hurt. And you have to be very, very, very careful. Now, I remember that I took this trade, and this was a winner, and I lost it on slippage. I had dual quants here, and I did have the 3 line. It was not a good trade because I took it right into this halfback line. And you should not trade into this kind of support. I should have let this whole thing go until it broke, retested, and then continued down. Now, it never happened, but it's better to let the trades go than to try to trade into all this mess. Let it break and retest an area of support or resistance. You have an absolute direction. All you need is an optimal entry. It's not that hard. On this move up, you just don't get an entry. It goes right through, and there's nothing you can do. Now here, you may have had a long continuation that worked. I don't know. Here, I don't see the 3 line for a mile, but this might have been a long continuation. This is definitely, if you had the 3 line, a long continuation. You have no short trade. This was another long continuation that was also successful. It just went 5. Here's where you have to be careful, right here. And it's hard for me to tell you because I don't know what the 3 line and I don't know what the quants were doing here. But what I'm looking for is a move down, a move back, a retest, and a continuation long. Now, I don't know if that would have been a fake out here on this candle. I doubt it, because I don't think you'd have the quants. Now, in talking about the quants, you must have the intermediate quant. And the more that I look at this market, the more that I see the intermediate is absolutely necessary. So you need the intermediate, and you need an additional quant. You need the intermediate and the major, or the intermediate and the minor, or you can trade the major and the minor. Any combination of those two. Now that's tough to get. A major minor or intermediate minor or intermediate major. And you're not going to get them on a lot of trades. But if you want to take your low risk entry right here, you've got yourself a perfect low risk entry, except you're trading into a ton of support. So you would stand aside. And you're trading into the support, which was a problem. And here, this move through, you don't get an entry. I'm not going to cry over the fact that you don't get great entries. Now, this looks like a really good entry to me that just takes you out. Now, this is at 1,400 hours. So we're trading at very, very low volume. Let's do one more day. You can see it's not easy because you always have to be aware of the wick. Now we can take a bigger stop, and here's where you're gonna pound the market into mincemeat, because at 9:30 you've got yourself the perfect short. Now you have to have the 3 line, and you have to have the intermediate. I don't know if you have it or not. I can't really tell. But if you do, you've got this entire move. Here, if you have them, and I don't think you did, you have this entire move. Here you have nothing. Here is your roll right off the 50. That's an absolutely stellar trade. And if you do what I said, you get the move up, the push down, the retest, and the push down. You don't take the loss because the second candle has a wick, and this is the entry. I hope I'm not confusing you, But this is the way you really have to trade. When you hit the 50, that's one of the hardest places to trade. Now, if you take a bigger stop, if you want to take a 13-tick stop, the wicks will never touch you, and you'll get every single trade. Now, we've never missed a direction. The only issue, and you can see the crude is much harder to trade than the E-mini. And we'll look at the Dow in a second. Here's your this is a continuation trade. You don't need a double hit of the 50. If you had the 3 line, and I'd be willing to bet you did here, you have yourself a nice trade. You have no long, and here is a very, very nice short trade. It doesn't make it. Here's the trade, the break, the retest, and the continuation trade. You've got your confirmation, and there's your winner. Boom. Now you could consider this a continuation trade, not a trade off the 50. Remember, here's the break of the 50. Here's where you need the pullback. Here's just a pullback. It's not a break of the 50. You can take this trade straight up, and there's another winner. You're not going to take this trade. There's your move up, down. There's your pullback, and there's your continuation short. There's your move up. See, this is not the kind of, this is just not a setup for a trade. This you can take. Well, you can't really take that trade either. This is where you can get really chopped up at the 50. And here's the move, and there's your entry. And you look at the size of that trade. That's a full winner. That's a $400 trade. Here's your break. You don't get any retest. You have no trade. Here's your break. And there it is again. Whoops. Just excuse me for 1 second. I just don't know who this is. 1 second, I'm sorry. Okay, there's the break. There's the retest. There's your entry. And there's your winner. The continuation trades are tougher. Now, I don't know if we had that trade here based on the quants. I don't know if we had the intermediate. I don't know if we had the intermediate here. I just don't know. If we did, we would have taken a loser on these wicks. No continuation, no dots. Here we need a pullback, up, back, and then up. And when you start getting these, I would just stay away. And there's your trade. There's your move down. There's the pullback right here. And there's your continuation trade right here. Now, I obviously the 3 lines in the reverse direction. I just want you to look at price action and market structure. So you can see, I hope you got the idea. Obviously, it's not that easy to trade. On these rolls like this, this is the move up, the move down. You need the retest, and then the continuation trade. You just can't take this roll. Now, you can, but I'm telling you it's riskier. This is what you're looking for. Or you're looking for the break, the retest actually, and then the move up. Now, price obviously always doesn't always conform to that, but those are the major settings. When you have this move up, you're looking for the move down, the retest, and the continuation. It's going to keep you out of trouble, even though it's going to cost you some trades. Now, I don't know what I did here. I'm getting the wheel of death here. I've locked my platform. Oh, the wheel of death ended. So again, here's the move down. You're looking for the retest and the continuation short. If you really want to be reaching a little bit, you can call this the move down, this big wick, the move up, and the continuation. There's, again, your perfect trade. And if we keep looking, we keep finding it. There it is. There's the move down, and there's the continuation. And you see how well price is defined here? I'm not looking at the 3 line. I'm not even looking at resistance. I'm just looking at the way that the trade shapes up. Don't try to take the sweep through. If it just continues up without a wick, can't take the trade. This gives you the best, and then the continuation. And the dual dots, and the background bias, and the major, and the minor, and hopefully you've got the 3 line. You've got yourself a long trade. Now, obviously, you're trading into the prior session's close. That makes it a little riskier. That's a discretionary trade. And then we're going to go over the Dow real quickly. What I just want to do is keep us out of trouble because we're going to get awesome trades. The key is to stay away when there's any kind of nebulous price movement and we just can't be sure we know what direction price is going to move in. And it's not the question of the direction, it's a question of whether or not we're going to lose it on the wick. If you noticed, we never traded into a candle that gave us a subsequent reversal candle. The worst we got was a candle that gave us a wick. So you see right here, there's no trade here. There's no trade here. No trade here. No trade here. Because it doesn't comport with any of our rules. Move through, well, the pullback, and then the continuation. Or the move up, the move down, the continuation up, and then down. So it doesn't make any difference. Now the dots and the quants are almost always going to censor the trade anyway. But either way, you just don't have any trade. Now on this move down, I mean, these are the kind of trade you have a green dot, 2 green dots. Now I don't know if you have these live or not, but this is a very tough trade. What you're looking for is it's the break of the 50, the pullback, and the continuation trade. And that's the only way you can trade safely. Now the YM is a wild beast here. And this moves straight through. There's your pullback. There's your continuation. There's your pullback. And there's your continuation. Now you got no more continuations. You're just too far up. Here's the move through. This is where you get into tons of trouble. You don't take that pullback and continuation. Now this wick may be enough, but you're really stretching it. You really want that candle to break the 50, so it doesn't quite make it. Now here's this roll. On the roll, you want price to move up, come down, come back up, at least with a wick, and then confirm the trade and head down. Now there's your trade right here, up and the roll. And you can see it doesn't make it. This is, I think, is just going to make a first target. And look at this trade. Now, in honesty, right through here, look at the volume. Volume is essentially zero. So all of these trades are very tough trades. So very, very, very slow. So all I'm doing is trying to take, obviously there are all kinds of variations. And also, if you want to stretch it, you can always stretch a little bit. But if you adhere to these rules, you're going to get the most conservative entries and skip. Like that trade here on the E-mini is just absolutely terrific. This one is absolutely terrific. This one's overbought. This counter trend, I like. This is just a ride down. And I like the fact that you enter on an oscillator signal with a wick. If you're going to take a counter trend and you have dual quants, that's a nice entry. But the counter trends are tough. Now you got to wait for the break and retest. And here's just the roll, the continuation short. Great trade. Here's your continuation short off the wick. Great trade. Here's the continuation short, too far down. You don't take it. So you're looking for 2 or 3 or 4 perfect setups that are really low probability, high probability winners. And the place you have to be the most careful, I'll just say it again, is right here at the 50, where price doesn't quite declare itself. Now, the only other thing I just want to add is this. When can you take a liberty? Well, when you're trading off an area, I used to look at this all the time when I was trading range. So when you're trading off an area of dual resistance. Now here's dual resistance. You have the half back and the 50. And this coming back in. Now, this is just a roll. You've already broken the 50. Come back up. You don't need to break it again. You just need to roll back to the downside. You don't need to break it again. You just need to roll back to the downside. These are different than trades through the 50, where you need the pullback and the continuation, or that first trade back up all the way to the 50, and then you need a first test and a second test. This does not make it to the 50. And you know where it makes it to? An area of dual resistance. The half back and the session open. And it rolls right here. So I hope that kind of clarifies things and doesn't make things worse. Now the dot system is extremely powerful. And what you'd like to see on almost every trade is those dual dots on your entry. They're going to minimize the chances of you getting a wick, and obviously minimizing the chances you're going to get a reversal candle. Very, very much. You're going to look for the background bias. That's going to minimize it even more. The oscillator signal minimizes it more. And trading off of an area of support or down off an area of resistance also helps. So it's not a dummy system. You just can't see an oscillator signal and look at one line and one color and say, okay, it's time to trade. You have to think a little bit. And this is the kind of trade, this is at 1:46 in the morning, but This is a break of the 50 to the upside. So now when you break it to the downside, you've got to get a retracement, and you just don't get one here. It just rolls through. So you have to, it's tough to let go, because if you do have the major and the intermediate, and you have both sets of dots, and you're trading off of resistance, 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 and resistance, there's 4 areas here: the halfback, the 50, the open, and the close. Because it's in the middle of the night. You can give it the leeway and take the trade. So you have to be just aware of everything. There's your continuation trade. It makes it. That continuation trade makes it. Here's your short again. It's just a roll. It rolls off a major resistance right here. Obviously, you got to look below. You have no dots. It's much riskier. And on these continuation trades, these are just great trades. So we've got to be real traders, and we've got to be on our toes to trade. I'm very wary of crude, and we have to be very careful of it at the 50, right here. When you get a trade like this, you just cannot take it. There's no place to get in, and you just can't hop aboard. Here, you got to. If you play by the rules, you don't take a loser. You break, retest, continuation, retest, and up. That's the hard part about that move through the 50. If you want to take it conservatively, you need that. No, I'm sorry. You only need one pullback. This is going to give you a loser. Then you're going to have to get back in. It's the move down, up, down, and then up. Now, I could simplify this a lot just by telling you to trade the dots and the oscillator signal, trading off of areas of support and resistance. But I wanted to give a little more sophistication to the trading because what happens at the 50 is where we lose most of our money. On the continuation trades, we do really well. And on the trades that set up really perfectly, like right here, this is just a gimme trade, I think. Trading off resistance, off a bear, off a bull failure. This is just a great trade. I don't know if this is oversold. I'd have to scale it. Its marking is oversold. If you have the 3 line, you've got the trade. Now you've got so much to confirm the trade. You just have to pick an optimal entry. When you've got the oscillator, when you've got both dots, when you've got the 3 line, and you've got here the intermediate, the chances of getting a win are very high, and we do really well on the E-mini. We don't take many losers, except when I try to trade into the halfback line or into the 50 and trade right around that 50. That's where you have to be really careful. So I'm going to go answer any questions. I hope now you know what the dots mean and why they're so powerful. And when you have both sets of dots on an entry, you've got a great chance for it going. Now, the only other component, like I said, is volume. And volume is going to really help protect you against getting stopped out on a wick. And if you want to totally eliminate it, you got to take a 13-tick wick. I mean a 13-tick, and that's, I don't know. So that's a lot for me. And this trade right here is a winner at 1 1/4, and then your re-entry right here. I should show this is another winner. That was our $400 trade or $400 configuration. We traded it perfectly, and it made us $400, $250, and then $150. So you just got to be conservative that way. That's all I can say. Here you see absolutely nothing.
So hang on 1 sec. I'm just going to turn the volume off for 1 second, and then I'm going to go through all of the questions. So give me just give me 1 second. I just want everyone to know that the crude dots will go out tomorrow, and we're moving from market to market to market. We're going to get the NASDAQ done, and then we're going to move on to Forex, and we're going to configure the entire Forex platform. Now, right now, if you own the whole system, you get all the additional markets. And I'm not telling you this as a sales thing. I'm not continuing that because it's so brutally hard. You know, Sergio's like, I already told you, he's going bald doing all this work. Now look at this move down. Look at this continuation trade right here. Now, this was an unbelievable trade. Dual dots, right off a resistance on a continuation trade. Now, this occurred while the platform was open. So these are accurate. You have your intermediate key. You have your minor, which is great, icing on the cake. You have both dots. You have an oscillator entry. You got everything here. And this was going to carry you all the way to here. And that's going to be this works. I don't know why my drawing tools are falling apart here. This is a 3.5 point trade. It's not going to give you a full winner, but your entry again is right here. Go right back in here. There's your big wick. And you're going to go from here down to here. 4 points. That's 350 bucks. So right here, you're going to make between $600 and $700 on this move down. And this is just happening as I'm giving the webinar right here. Everything is confirmed, and you can see with all this confirmation, you've got yourself a great trade, and the market doesn't pop a wick on you. And you can ride this thing all the way down until you get this. Now, I think it's a little bit too risky to take this last continuation. And we can see, now in real time, we did lose the 3 line. So we don't have the 3 line, so it's no trade. But you're 7 points off the 50. So you're just not going to take that trade. It's too oversold to think you're going to move.
Now, this is a very rugged trade. You've got your minor and you've got your intermediate, which is what you want, and you've got your oscillator signal. But you see what happens when you take risky trades like this? It loses. Here's the entry. This is as far as you get, and it hits the wick, and you're out. Now, if you went back in, you got a winner. This is why to stay away from these. Now, you're starting to get confirmatory on the fast speed here. What we would just see is what happens at the 50. It's coming up to the 50 when we would need a double test here to ensure it's going to hit, bounce, come back up, bounce, and fall again. And if it moves through, we need a pullback. This is where you have the most trouble. And this wick is right at the 50. So you've already got yourself about $700 on the move down. Don't risk anything as it comes up to the 50. If it moves through, you need a pullback. If it hits the 50 and bounces, let it come back to the 50, bounce again, and come back down. And it only has to do it with a wick. In fact, 2 wicks in a row into that 50 is that dual pullback. You take that second wick and down you go. How many times have you seen a third wick in a row? Like never. And that's that dual hit. So, and we can just see what Crude did right now. And then we'll. Now here's Crude right now. Now here's your entry. It's not the most, it's right here. You're not going to take this break. Listen, you could. It's the riskier entry. It's the oscillator entry. But all you're doing is taking your first break. And that could move, come back, and then retest. So, whoops, it's discretionary. I can't say it's right or wrong. I can just tell you that taking the continuation trade, and here you would get them both, but you could have gotten bopped in the nose here on this trade, is just take this trade and you've got 1, 3, 5, 6, 7, 8 ticks. You've got a very clean first target here. And in a sense, you're doing exactly what I had looked for. The move up, there's the pullback, and there's the continuation. Now optimally, you'd like a double test, but in this particular case, you're way off. And this is just a trend trade. It's already broken the 50. There's no question about that now. And all you're looking for is a way to get in. And here is a continuation trade, and you would take it. And it's moving in real time, and we'll see what happens. You've got triple quants. You've got decent volume. You've got confirmatory dots. Your bias is long. You can see you have a little bit of cyan here. So you know that the 50 is below the 15 on the higher time frames. And the market's, and it's now trading at 1,000 contracts a minute. So that would have taken us out. Wouldn't have done it. That's probably going to go. And probably the problem is now we're trading on decent volume. I can't alibi for the trade. It's just late in the day. There's your second dot. You can take the second entry. But I'm just going to answer questions. I think trading crude this late in the afternoon is a little risky, but this thing is just jerking around. Now here's what's happening on the E-mini. See, there goes crude, and it's going to probably launch off this wick. We'll see. All right, well, it's just flopping around. And the E-mini's moving on decent volume, back up. And what we can do, now here's the open. It's coming right back to the open. All right, let me answer questions. We can see as we answer the questions what happens with crude. You can see that crude shot that wick out, and it's just jumping all over the place here. I can just hang on 1 second, and I'm going to answer any questions. Okay. I'm just watching crude, but let me get to the questions. Okay, hang on. I'm going to go to the first. Now, the only thing I just want to add is that trading Renko or Unirenko obliterates price action. So we have to be very, very careful. That's why the indicators have to be so powerful. I mean, I'll just show you really quickly. I have one chart up of a 5-range chart. Now this calls, now this still has the cash metric, which we've just decided just doesn't have any predictive value. It's got everything here. Now, I don't see any background bias on it. Now, let me just make sure it's in here. It's here. That's just because NinjaTrader is being, let me just try to there it is. So there's our background bias. And you can see how difficult it is to trade. Now here's a perfect entry. Now here we can give a consolidation entry because we can read consolidation here. And you can see this long period of consolidation and this move down off a resistance right here. This is just my son. Okay, and here's another one right here. But you see how much tougher it is to trade. Here's another trade out of consolidation, another trade out of consolidation. Now this is a kind of trade you can't get. There's no entry. So although you get to read price action and market structure better, it's very difficult to trade. This is today's NQ. And I can't rotate this to another chart because I got the NQ quants in here, and I've got the NQ cash metrics in here. So I can't put this on another chart. I can't put this on another chart. But I wish the cash metrics turned out to be what we had anticipated, but they just weren't. And they just don't predict they just don't give us any more predictive value on a trade. Now here they're both red. Here on this successful trade, one's green and one's red. They just don't work. And I don't know why. They should, but they don't. So let's see if this. Sorry, my son always texts me when I'm doing this. He always texts me when I'm talking to people. So let's see if this crude trade made it. I don't think it did. Wow. I went 4 ticks. I don't think it went 5. So it just didn't do it. We're just trading at a very treacherous time. The crude pit closes at 2 o'clock. And after that, you know, it's pretty rugged. And when you get a trade like this, which is a complete winner, and a trade like that, which is another complete winner at 12:45. I mean, these are killer trades. Now here you just don't have an entry. And here I think you get 2 wicks. Yep. This is where you're looking for the double test. It's very difficult to do it because you're going to be very impatient, and you figure this first wick is going to put you in this trade, especially if you have triple quants and you're trading off of this area of strong support. To get that second wick is kind of surprising, and we don't know here if we had the 3-line or not, because we're not in the room at 11:25, and I can't tell what the color of this was. We've got 3 black in a row, so I don't know if we have an entry. We've got dual dots. We are coming into an area of resistance that just walks through. So this is either going to be a trade you take on tremendous patience on the break, the test, the move up, and the retest, and the entry here, or you're going to lose the trade on this wick, get back in here, and then get all your money back on this move up. So crude is never that simple to trade here. Again, nothing. Counter trend trade, you cannot take red dots all the way. See, again, dual wicks. If you take the test and retest, you've got both full winners here. If you just take the first test and not the second test, then you're gonna take a full loser and then a full winner. And the exchange on that is going to be very close to 50-50. It's really a shame, but that's just the way it is, unless you have that extreme patience. Now on crude, I think it's best to take that patience. If you lose it on the first wick and you don't get a second wick, let the trade go. Okay, let me see if there are any questions. And really, I've just kind of worked this out after looking at the way the price moves on the markets over a long. You just sit and you just watch price. You can't do any better than that. And we want to leverage everything we can. These moves up on the E-mini are just unbelievably good. Now on the E-mini, I would really tend to take that first pullback. I'd let the break and test
and take it. On crude, I would look for the second pullback because it's far more volatile. And the second pullback gives you a significant margin of safety. For here, that's the break and test. There's your continuation. That's your continuation you can't really take because the market's overbought. That's today. There's your roll. What an awesome trade that is. There's your continuation. Awesome trade. I mean, you could have made a lot of money today. This move up is about 600 or 700, and this move down is about 600 or 700. That's $1,400 right there on those conservative trades. Both with dual dots, both with the 3-line, both with the quants. Re-entry on a trend trade with the wick. Here you're oversold. Staying away from these trades where you get a wick and you get a wick. You're going to make it if you go in on this wick, but if you take the first roll, you're in trouble. And there's nothing to tell you to go in here at all, unless you wait for the wick to get in. I haven't really looked at that, to tell you the truth. But if I did that, I couldn't think of any rule. It's just that, okay, just wait for a wick and then get in. I just don't have that. And the fact is that this has all been happening since we opened the room, and there's no 3-line here, and there's no 3-line here. So it just so happens you don't have an entry on these trades, even though they worked. You could not take this entry, and you could not take that entry. For some reason, the 3-line knocked out on this move up, and it just inhibited you from taking both trades, which is probably good because these are very risky trades. Now let me answer questions. Hey, good afternoon. Good afternoon. Sure, Alan, we'll email you the recording. RB, I think I went over the background colors. They are the strength of the multi-time frame trend of the market you're trading. And really, it really looks at the 15, when the 15 crosses the 50 to the downside and price is below both, it's dark. When the 15 hasn't crossed the 50 yet to the downside, but they're both red and price is below the 50, you get this tan color. When price is below the 50 and the 15, and the 15's cross the 50, but the 50 is yellow, that shows you're not in, you have definite strong down bias, but you don't have a strong trend. So you get the lighter pink color. Same thing with the green here. 15 cross 50, exactly the reverse. And if you open up the indicator and you go to the 3-line, I'm sorry, to bias, you could see these 3 colors. Here, 15 cross 50 to the upside, price is above both, and both are green. 15 cross 50 to the downside, the 15 and the 50 are both red. Here and here, 50 and the 15 are both red, 50 and the 15 are both green, but the 15 has not crossed the 50 yet. Here, the 15 has crossed the 50, the 15 has crossed the 50, but, whoops, I'm mixing them up. Here is what I said they were. The 15's crossed the 50, they're both green. 15's crossed the 50, they're both pink. Here, on this color, the 15 and the 50 are both green, but the 15 hasn't crossed the 50 yet. Here, the 15 and the 50 are both red, but the 15 has not crossed the 50 to the downside yet. Price has got to be below the 50 for there to be a short bias entry. Here, or short bias color. Here, the 15 and 50, 15's crossed the 50, but the 15 is yellow. There's no trend on the shorter time frame. So it's a riskier time to take a short, but your bias is short. Here, 15 has crossed the 50 to the upside, price is above both, but the 15 is yellow. So you've lost that powerful uptrend, but your bias is long. Those are the three colors. And you can make them any colors you like, but those are just the three I chose. I'll just go here. It's nice because we have a big options portfolio, and I'd like to see the market come back and make us some money today. We closed out Costco today for a nice profit, and we have two options, I think, expiring today, unfortunately. Both in the defense industry pulled back. Okay, let me see. What are the brick sizes for the Renko? Fitzroy, remember, on a continuation trade, the candle body, here's the inputs. Now they change by market. Remember that the NASDAQ is at 10,420. It's paging me. It's a 5-2-10, but in practicality, what it means is on a trend trade, every candle body is going to be 7. Now we take an 8-tick stop. So if you don't get a wick, you do not get stopped out. On a continuation trade, the biggest size of the candle, this is a 7-tick candle body. This is a 5-tick wick. Maximum wick. Maximum total candle body on a continuation trade is 12 ticks. Now on a reversal candle, it's a 5-tick candle body, and it's a 7-tick wick. And all this has happened here is it's come back 13 ticks. Instead of getting one more down, it went one down and then came all the way back to close to the upside. It went 12 up and then went boom, 13, and it popped this candle. So those are the metrics of the trade. If you make the candle body smaller by dropping this 5, the candle body will get smaller. If you drop this to 1, you're going to get a new candle body every 2 ticks. And if you make this smaller, instead of getting a 12-tick candle plus wick on a continuation, you're going to get everything's going to speed the chart up. And if we make it any faster than this, we're never going to get it. I mean, we're going to smash through our entries. And we're already having problems with slippage on crude that we must adjust for on the trade. I mean, yesterday I got really hurt on slippage. So we have to be very careful on slippage. Now, if you want to take a 13-tick stop, you're never going to get out of, you're never going to lose a trade on a wick, and you get this entire move down. But then you're going to take a 13-tick hit on the pullback all the way to here. So we'll do this configuration for you if you want to take this additional size risk, but you're going to have to trail this whole trade by over 3 points to take it. And I would prefer to trail it on the candle body, and if we get a wick, just re-enter on the wick. That's all. I mean, it's not that's all, but it all depends on your risk tolerance. And for me, I mean, it's hard for me to even leave the stop, let alone do that. Marlene, the quants are looking at the correlative markets, but they're not doing it by quadrant. In other words, these dots are looking at the 15, the 50. They're looking at this. Whoops. They're not only assessing trend, they're assessing market structure. So they're looking at the 50, they're looking at the 15, and they're looking where price is. So they're doing a really sophisticated analysis. But this is only occurring on two markets, the NASDAQ and the Russell. This is occurring on 9 markets, and all it's doing is looking at a 15 period, the color, whether it's red, yellow, or green, but we have to create different speed Renko's for each of the different markets, and that was what's the killer. That's why when we first worked out the platform, we kept changing the speed of the quants, because the correlative markets have to move at the appropriate speed. Some of them are slower than the E-mini, and some are faster. And we've got them perfectly, we got them down. And this is the NASDAQ, the Russell, the Dow. I can tell you their treasury notes, treasury bonds. There's certain precious metals and currencies have a tremendously high correlation coefficient. So they're looking at other things in other ways. So they're not the same thing rehashed. And this middle quant has such a tight correlation with direction. Now remember, it's not looking at price on the trading chart, but look how closely it correlates with price. When the price on the E-mini falls, that middle line falls. As soon as it changes direction, this middle line changes. And I can promise you, it is not looking at price here. Same here. Now, if it was looking at price on this chart, you'd never get this yellow, because price here just goes straight up. And here you're going straight down, and you have nothing but yellow. But when you get that middle line on the entry, you really need it to trade. And you can't anticipate it. You got to have it. And it's just really, really important. So I can't, oh my God. Hold on 1 second, I'm sorry. I don't have to answer this. Okay. So it's looking at a completely different metric. And it is really doing assessment of money flow, because it's looking at the movement of money from asset class to asset class. And although the only one that really makes all the world a difference is the middle one, and that's only turned out on the Renko. If you have triples, I mean, you've just got yourself a killer of a trade. Like, look here. You've got every single quant. Now, if you can get into the trade here, you've got an unbelievable trade. You don't get them that often. Here's your triple greens, and you get it right here on this entry. This is at 1032. Now, this is where you can give yourself some leeway. You're trading right at the 50. You've got an oscillator entry here, and this does not really work with the type of market structure I was talking about. You need a break and a retest, and optimally a double retest. But here on 3 quants and the oscillator signal and both dots, you've got to take this long. And I mean, you'd be crazy not to. You've got too much confirmatory information. The 3 lines aligned, you got yourself a winner. So, you can give yourself some leeway when you've got this overwhelming abundance of information to tell you on correlative markets and the whole shebang that this thing is going to go long. This continuation trade, this continuation trade, this continuation trade, if you had the 3 line, and I don't know if in real time you did. Now, this is the only other signal I didn't mention, and this is our continuation signal. It's a really clever signal that looks at price action and market structure on the two higher unit Renkos. You don't see it very often, but when you do, it gives you a high probability trade to continue. It's always going to be on a continue. You almost never see, you won't ever see it on the initiation of a trend. It's only going to be on the continuation of a trend. And normally you don't see it that often, because if you look through the chart, you just don't get them very often. They're very, very rare, because it takes so much for them to align that if you look through all of this, you don't see any. This is not one of them. This is, I think, my junk, which I can take off. You just don't see them. So when you get them, use them, because they do work. I'm just going to look for one more. Just not another one. They just don't occur that often, but they're really, really, really good. So I'd rather take a signal that occurs rarely, but almost always gives you a winner. There's another one. Now this one doesn't work, but this one, I don't know how the 3 line was. It may have been a bad signal. I don't know. I can't really tell. But that was another one. And even that signal, I'm not going to tell you almost all wins 100%. There's your signal. And look at that continuation trade. I mean, that's a jackpot of a trade right there. Now, I don't know if you have the 3 line on these candles. I can't tell you if any of these were entries. We're not looking at it live, and we've got 1, 2, 3, 4, 6 black candles in a row. So I don't know. There's your entry, and you're going to get yourself a nice trade. Let me just keep looking here. The 50, it's based on the slope. And if you look at the indicator, we set a slope degree. Now the 2 is the slope degree you want to use. And it took us a long time the 2 doesn't correlate with 2 degrees. It's just the way the code is written, that the 2 is going to give you a really, really nice assessment of momentum. And that's all the 50 does. When the 50 is green, momentum is to the upside. When the 50 is yellow, momentum is flat. And you can take a long trade on a flat or a green. You can still take a long trade on a red, but be careful when you do. I'm not going to tell you, I'm not going to censor those, but optimally, you'd like to take a long trade in the direction of momentum. You will still get trades that break, test, and move up on a red 50, but I would have caution on those. And you see right here, this is a great long trade. Now you don't have confirmation, I don't know you have it, but the 50 is green. There's potentially a nice trade. 50 is green or yellow. So the color of the 50 does matter. And be careful, although you can do it. See, there's your move up. There's your continuation up. I can't see what confirmation we had in this market, but you can see how the market tends to respect the direction of the 50. Now look at that trade. You're taken out here, but you're right back in. And then this is more than you need for a full winner. Now, I don't know if you're overbought here. Let's see if you are. These are what you just wait for. There's no reason to extend out your risk when you have an entry like that adheres to all our rules. It's 7 points. You can't chase it up. But you're going to get this winner here. It's going to be about 200. And then you're going to get a $350 winner here. So you make $550 on this move from 12 o'clock to
to 1243, and that ain't half bad. So, this is the trade right here that I like. You see how you got the break? Whoops. Now, optimally, you'd like a double test, but look below. You've got both quants, you've got both dots, and you are trading into the open. So it's got its risk, but if you take it, you're good. You got a lot of confirmation on that trade. So all a piece of software can do is provide you with a component of risk. No piece of software can give you a triangle that you take short or a triangle that you take long. You have to make a risk assessment, and that's what the platform does incredibly well. It tells you how risky is the trade on the entry. If it's a very, very conservative trade, it's likely to be a very, very good winner. If you extend yourself out on the risk, you can get really beaten up. Here's your continuation off the small wick. If you have a green, if you have the modified, there's your continuation. Even better off a down candle, and there you go. Now, I don't know if the market is overbought. We can check it. But I think I'm just being redundant now. You're 6.5 points, so you're really, really extended out. To be careful about that long trade. And I don't know if in real time you have the intermediate. You might not. I don't know. You've got the major and the minor, but the intermediate has hung, has kind of given out on you. There's your continuation signal. That's at 1520. I don't think you're going to be trading. You get taken out in a wick anyway, but you've got no volume. And here is where you may not want to wait. I mean, you've got your move up. It does not break the 50. So all this is another roll to the downside. Remember, if it breaks the 50, then you need to test, at least one test and up. If it comes up to the 50, like this, you really need a pullback and retest. And if you notice right here, if you took the roll, it took you out. And if you waited for the test of this small wick, you got the whole move. So I've been watching carefully how the trade goes. And that first candle is always difficult. And I just wanted to say one other thing. When you're in a trend trade and you miss the optimal entry, you give up 2 ticks. But on a Renko, when you take the second candle, it forms a double bottom, here a double top. So the second candle, although it does cost you 2, also has tremendous benefit. Now, it could push the wick through, and some people use the price as the bottom or the top. Other people use the candle body, and I've never been able to determine, since everyone says differently and it's not written in stone in any book. This is pretty much a double top, and then you roll from there. So that's why taking the next candle, even though you give up 2 ticks, can always be your best trade. The wick is that pullback and continuation. Okay, Jeff.
Okay, David, I've been watching the ticks alongside the Renko charts. I've noticed that when the indicator lines are up and the ticks are greater than 700. Now, when you say ticks, David, I'm not sure what you mean. If you're looking at this line, at this number, these are just contracts crossing per minute. I'm not sure. We're not. We're not doing a tick. This is just our volume metric, and all we want to see is contracts per minute. And if that's what you're looking at, then all you're doing is saying that in higher volume, you're more likely to get a winner than in low volume. On the E-mini, you want to see about 1,500 to 2,000 contracts per minute. On crude, at least 400 to 500 per minute. And right now, you can see that crude is sitting at 8, and no one's trading it at all. And there are a lot of contracts crossing, and I think that crude is rotating this week, but it's still at 500,000 contracts today on the June contract. I hope that's what you meant, David. Hope not misinterpreting that. No, Hala, Sergio is working on the crude dots now. That latest entry hasn't come. We just did them. You'll be receiving it soon. I think I did, Hala. You know, the horizontal lines, this is the value weighted average price. There's the market open. The other line, if I squeeze it, that's yesterday's close. And the blue and red are the pivots. There's no other horizontal lines except the 50. That's everything. Look at that. Now, this is really a good entry, I have to tell you, because you essentially break and pull back, and it takes you out on this next wick. I mean, it's like the wick of death here right now when we're trading. But then you'd have to re-enter here, and you're still in the trade. If you waited for the second pullback, you're perfect. But this one's really hard to miss. I mean, hard to let go, because it looks to me like you're on triple quants. Remember I said be careful to take a long on a falling 50? That's the issue. You're taking a sweep through to the upside with momentum heading down. And those are always riskier trades. Now, it looks like, we're getting wicked to death, but we really don't usually. Okay, let me just mention the oscillator, because Larry Gonzalez. Every time the oscillator line crosses the 50 line, which is the cyan line, you're going to get an oscillator signal. When it crosses to the upside, get an up candle, an up triangle. When it crosses it to the downside, you're going to get a down triangle. When the market is below the 20 line, you get these up reds. And I wanted to remove them, but everybody in the room wanted me to keep them. And when the market is above the 80 line, you get the down blues. They're telling you based on stochastic, you're overbought. We don't use that metric. We use the distance of the 50 from the 15. I'm sorry, the price from the 50. Although, in truth, I would look at this move right now as being overextended. Look how far this market has come straight up. I mean, how many bulls are there out there? After a while, you're going to run out of bulls, and the bears are going to start pushing this market back down at least a little bit. So this is a pretty extended move. Ron, the CL dots will go out tomorrow. Has not been said, Rick. Hala, they're all three markets in the correlatives right here. All three of them. Because there's no, like in here, the NASDAQ and the Russell are really, really your key markets. All three of these are needed.
So they're all the markets. This is just a choppier market. I mean, a lot of traders can't trade crude, and a lot of traders who trade it lose a ton of money. So we have to trade this very conservatively and be very careful with it. That's why we need that intermediate plus a minor or a major, or we need the intermediate and major, intermediate and minor, or the major and the minor. We need 2 quants in order to do this. Because remember, these are 9 correlative markets. These are only 3 correlative markets set at different speeds. This is the fastest, this is the intermediate speed, and that's the slowest speed. There's not 9 markets here, there are only 3 markets. And they're just set at different speeds. So you'll take the fastest speed and the slowest speed, the intermediate speed and the fastest, intermediate and slowest. You need 2 of the 3. Now you're going to get a lot of moves on crude you just can't get into, but you're also going to avoid 1 ton of losers. And that's our goal. It's not to get every winner, but to try to avoid every loser. And look at this market. I mean, they're just buying it up again. Here's yesterday's close, and that's where it's approaching now. And this is where you might anticipate the market to turn. Here's the half-back line. It's broken it. It's gone right through it. And if I look here, I'll just tell you quickly that 27.2450 is the high of the day. So 27.2450 right here. I mean, we're approaching the high of the day. Yeah, pre-oil inventory, Rick, on Wednesdays is a terrible time to trade. And all the crude traders are just holding off, waiting for the inventory report. It's really, really difficult to trade. Marlene, what they mean is that the correlative markets are in those quadrants. In other words, on the faster speed, where you get the dots, you get the X's. On the slower speed, where you get the dots, the 15 is above the 50. The 50 is sloping up. Price is above both when you have the darkest dot. When you have the lighter dots, like this, that's where you have the weaker trend. Here on the lightest, this is where you have price above the 50 and the 15, but the 15 is flat. There's no trend, but your bias is strong to the upside. So that's your weakest, that's your strongest, and let's find the intermediate color. So you can see it right here. There's your weakest, the lightest pink. There's your intermediate, this deep red, and there's your strongest, where it's either you can call that maroon color or almost an off shade of brown. And these are the 3 different strengths. And here's the 15 and the 50, 15 above the 50, but the 15's flat. Here the 15 is above the 50, but they're both green, both red. Here the 15 is below the 50 and they're both red. So different trend strengths. To me, I don't look so much at the color. I just look at the confirmatory dot. I just want to see 2 dots. If I get those on a nice entry, it usually is going to go. Now, if you look here, you have 1 dot and a big wick. You enter on this wick with both dots, and the trade goes all the way to here.
So those dual dots on crude are really important. Now you can't take the turn. You look for the roll back to the downside. Here's where you get both dots. And you get them on this pullback. And down you go for a full winner. If you take the first roll with one dot, and yet this is the fastest dot, you're going to still get a winner. Because it's going to go, there's 1, 3, it's 5, it's going to go 6. 5 or 6, you can't tell which. You're going to get a first target, but this is the meat of the trade right here. And it's also the least risky. The dual dots with the pullback entry. This is a bull failure, and down you go. So same thing here. Can't take this entry here. Wait for the wick. Now, you don't have both dots here. It's riskier, but you can enter. You don't have both dots here. You can enter. It's riskier, but it's a winner. You don't have both dots here. It's riskier, but it's another winner. So it just shows you wait for the pullback. Wait for the pullback. Wait for the pullback. And, oh, you do have both dots. So it's hard for me to see. Both dots here and both dots here. And both trades, but this is dead volume, but they're still giving you winners. Here, you never get dual dots. So you just let it go. Now, Stephen says it looks complicated, but it's actually very, very simple because it's very intuitive and there's not a whole lot to think about. I mean, you're looking for a low risk entry, and the low risk entries are very, very easy to spot. I mean, I don't agree with that. Everything is projected onto the candle except the quants. And we could project the quants onto the candle. Our next step in the platform, which we've had lots of people ask us to do, is to take all of this data that I told you, the 3-line, the dots, the intermediate quant on crude, the major, the minor, the intermediate, or the major, the intermediate, and create an entry signal that looks at all of those, which is essentially what the auto trader does, and create that signal here. And we're going to do that. Only that's going to take us about a week, and we just finished crude. So it's just a little ways off. Then we're going to have then we're going to have sort of a dummy entry where you're going to have everything aligning. The only thing it's not going to look at is market structure, where you pop a wick. So maybe you want to take the trade a candle later. But it's really about as intuitive as it can get and assimilate data from so many time frames and so many markets. I mean, you're looking at an awful lot of data. This 3-line alone is looking at 2-unit Renko multiples of order flow, stochastic, and momentum. That's a lot of data to project just in this candle body. So you're not looking at a little bit of information, but we're looking to predict the direction of price, and we want to lead price. We don't want to lag price, and it's not easy to do. All this other stuff that you see just doesn't work, which is why so many day traders fail. And we want to make money almost every day. It's not going to come off of a simple Bollinger Band and a couple of the stuff that people have been throwing into these platforms for the last 20 years and don't make anybody any money. It just doesn't work that way, unfortunately. Yes, Hushang. No, it's going to go out tomorrow, Hushang. Sergio, I'm going to be out of the office all day, and so will Rory. It's going to be poor Sergio here by himself for the first time in 3 years. But I've got to go up to northern Florida. I actually have to take a plane, and I must do it. He's going to he'll sit here and he will do it. and you'll have them. You'll get them tomorrow. David, on crude above 500, on the E-mini 1,500 contracts to 2,000. On the YM, about the same thing as crude. You want to see at least 500 to 700 contracts a minute on the YM. And that's about the same as the NASDAQ. The NASDAQ may be a little bit more, maybe 600 to 800. On the YM, about 500 to 700. That's good volume. Anything less than that, and you're going to have a little bit more risk. Yes, Bob. If you don't have it now, just check the indicator. Go to indicators. Go to the volume and make sure that it says bottom right on it. You should have this in there. It's called the RL Uni RLV, right line volume. And you can make it any color you want, any font size you want, and just make sure it's dialed as bottom right and not bottom left, top right, top left, or center. So, and you should get it, but you should have it. If you don't, you'll have it in the next package. Okay, Mercedes writes, Mercedes, the only thing I can't tell you is that because it's taken us literally 6 months to figure out the best correlative markets for crude. They're really tough, and I just don't want anybody taking them. I apologize for that because I try to give you almost all the data, all the inputs, everything on every system. But that's the only one that I want to hold back because that information and also the speed that we use those markets is brutally difficult. And that's what the dots are based on. They're very, very good. And crude, which is brutal to trade, this can tame them. So that's the only information I have to kind of hold. I'm sorry about that. Mark, right now there is no 1,000 contracts per minute. I mean, it's too late in the day. What I was talking about was 1,000 was optimal, and maybe for a minute we were getting 1,000 contracts a minute, just briefly on the E-mini. But in general, we're getting this is just very low volume right now. So you see the E-mini into the close is going to pick up volume. It's going to trade close to probably 1,500 to 2,000 contracts a minute right now. As we trade into the close, it's picking up volume, but there's no volatility. So, I mean, you have to, usually with volume comes volatility, but right now the market's dead. I just wouldn't trade it. Yes, Tim, this is being recorded and we'll send you out. Thank you, Nirali. David, if you enter the trade and the 3-line goes against you, just stay in the trade. The reason it probably goes against you is stochastic divergence will turn the stochastic line in the opposite color and take the 3-line away from you. Now, if it does that in the middle of a trend trade, for me, 95% of the time, stochastic divergence fails. So I just stay in the trade. Like here, this was probably stochastic divergence right here. Now remember, we're not looking at our time frame. We're looking at other time frames. But stochastic divergence turned the stochastic against us for one candle. But you see what happened. It ran right over it. So usually in a trade like this, you may lose it on one candle, but you'll get it back on the next once you get the failure of divergence. And I've been looking at divergence signals actually on the oscillator we have. and occasionally they fire a beautiful signal, but they're just not reliable. I was going to have Sergio program stochastic divergence heads up, but I'll tell you more often than not, it does not work. And that's what happens on the 3-line. If you get stochastic divergence and in the middle of a strong trend, and it's a big one, this is very extended, and this is where you would anticipate stochastic divergence to occur, it fails and price goes lower. And this is in real time, remember. So I mean, you can get out if you think the stochastic divergence is valid, but reason I didn't mention it is I would prefer that you ignore it. Now, the one thing I'll tell you is if you'll notice what happened in real time is that stochastic divergence caused a wick. See that wick? It would have taken you out of the trade, and you'd have to go back in. So it did have some, remember, this is 12 ticks. It turned the market. So some people would call that successful divergence. And if you're trading a 3 or 4 tick range, you got yourself a nice trade. But we're not looking to do that. And most of the time, it's just not going to have any. It's not going to have any effect. Here it is right here on crude. On this right here, it doesn't do anything. Crude just continues to just plow down. Now we coded divergence into it, and divergence will change the color of just the stochastic line. And if the stochastic line goes from red to green or from red to yellow, it'll knock out this halo. And that's what happens occasionally in the middle of a big move. Again, my recommendation is just to watch it, but don't bail out on the trade. Absolutely, Harold. You can create alerts and place trades when the signals line up. You can do that. And we're going to be working on, we just recently took out all the alerts because they were beeping like crazy and everyone was going insane. And I thought people were going to attack me. So Sergio took out all the coding. But if you have a specific coding that you want, we'll help you with it. But it's going to have to be something stellar for us to do it. But we're going to be coding in, like I told you, the primo signal that can come with an audible alert that gives you the ability to take an entry when everything that I talked about aligns. And we just haven't had the time yet to do it, but we're going to do it. But you absolutely can code alerts into this if you want to. We have to do it unless you're a coder, but we would help you. Especially if it helps us, Harold. We would help it. No, RB asked a great question. We don't use the same Renko settings for all the markets. For the E-mini and for crude we do, but for the NASDAQ and the Dow is a separate Unirenko setting. It's double. Whoops, opened the wrong part. The Dow is 10,420. Remember, the E-mini is 5,210. We use different settings for Forex. And we use different settings for the 6E, for the currencies. We haven't formatted those charts yet, but I really want to get those done. The 6E gives you great trades, especially if you're in Europe and you want to trade the 6E. You get great setups on the Unirenko. We need to speed the Unirenko up just a little bit, and we have separate settings for Forex. That's part of the customization of the software. You can't take the same setting for every instrument. It depends upon its average true range or volatility. And you can't take an index that's 25,000 like the YM and trade it on the same as an index like crude that's $72. So they have to be changed and modified. And I just lost somehow my YM chart just vanished, but that's okay. I think I might have blown it out there. But we'll give you all the settings. You don't have to worry about that. And remember, I haven't shown you stocks. I'll show you one really quickly. Now remember, all the settings are wrong for stocks. The quants are wrong for stocks. All that's wrong for stocks. But it'll just give you a little bit of a feel. I'll show you the QQQ. Now, a lot of people trade the QQQ, and the QQQ on our software works great. Look at that entry on the Qs. Now, don't look at the quants; they're not working. Those are the E-mini quants, and they're absolutely all screwed up. Because they're looking at the QQQs, and those markets don't exist. Look at that. Look at that continuation. Look at this continuation. You get great signals on the Qs. I love the Qs. Now you can't look at the quants here. Now obviously that's a false signal. I don't know if that would have taken you out, and it might have. Here's a continuation, but you just look at that continuation, and these are big. Now you can take a big stop here because you get big moves, and this is where I would risk 13 cents on a trade. Because I mean, you can make $1 or more trading the Qs easy. And the SPY also is a terrific chart to trade. I mean, if you want to day trade stocks, you've got the margin and the account size, and you don't do what everybody else does, trade small biotech breakouts, and do the same nudnik stuff that they're charging at $17,000 to learn that nobody ever makes money on, trading bear flags and bull flags and pennants and all that same stuff. This is going to give you terrific entries on anything that you like. And in order to get them, I'll just show you really quickly. I have to get a second data feed for stocks, and I get the Kinetic data feed. It costs me $50 a month. I get 500 stock tickers for that. So it's really chintzy to be able to trade. If I wanted to trade stocks, it would give me it's a nice opportunity to do it. No, I agree, Mark. I mean, we can trade crude into 130 or 230. I just think I agree with you that the crude pit is gone. And somebody told me to change the session on crude, and I'm just going to do it now. So your next template will go out correctly. And what I want to do is I want to change the session on the levels indicator, because I moved on the levels. It asks you the session so that it gives you the open and the close. And I mean, really formally, you can trade crude till 4:30 p.m. Eastern. And so I'm going to change the session date. I have it here. I have it right. I have it at 4:15, which is correct, from 9 to 4:15, which I think is an appropriate time. Listen, you could. I agree, Mark. You could go at 8 a.m. It's not going to really matter very much. No problem, Naral. You have a great day. Well, you could see live trade. You're going to see live trading in the room. I mean, I can't. Obviously, there's nothing to trade here. I mean, I'm showing you the signals and exactly what we would take in a live market, Patrick. Because they're different for different market, different calculations, because different markets run at different speeds, Brian, and the markets and the correlative in the quants need to have an appropriate speed. Like the E-mini, if you look at the speed of the E-mini versus the speed of crude on the same Renko, it's a 5-2-10 on both. If the correlative markets on the E-mini ran at the same speed as the correlative markets on crude, they would move way too fast, or vice versa, these would move way too slow. So we have to modify the correlative market speed based on the speed of the market they're tracking. And that's what takes all the work. And that's why each individual instrument is and each workspace is optimized and different. Oh, thank you, Hala. Listen, I'm a single dad, you know. It's just been him and I for so many years that my son and I are kind of like we're very close. He's going on 17, and actually, I'll show you his picture. You can't see it, but he's really a great kid, and he knows he always has to tell me where he's going, or I get upset. Terry, about 80%, and the risk to reward is about 1-to-1. So now I want you to understand that the risk to reward is a full loser versus a full winner. But let me remind you what happens on our ATM. We're on an 8-tick trailer. So if let's say, for instance, that the E-mini, you start out, I may not have to draw anything, but here's your stop, and here's your entry. Now let's say that let's say the E-mini first target is a point. Last target is 4 points. So, but let's say it goes 3 ticks and then comes back to stop you out. Well, this 8 ticks jumps up 3. 1, 2, 3. So when it comes to taking you out, you're only out 5 ticks. The amount of money is commensurate with how many contracts you trade. If it goes a 4th tick, it's going to come up another. Now, let's say that 4th tick doesn't take you out. It hits it, and it won't take. Then it comes back. Well, you only lose 4. So you're only going to lose that maximum amount on a trade that doesn't go a single tick in your favor, and you're only going to make the maximum amount if the trade goes all the way to 16 ticks. So it's a way of minimizing your losses, and also, if you get a full loss, which we rarely do, you got to go all the way 16 to get a full win. So we're trying to save money on the loser because we don't often go 4 points on the E-mini, but you'd be surprised. When I showed you today, there were a lot of trades that went 16 ticks or more. So that's our honest risk to reward. The risk moves as the trade moves in your direction. The reward is fixed. Irene, you do have to have one of 2 Russell feeds. We put a default setting in so you can have the TF or the RTY. Either one will work. It got to be such a problem with some people having one and some people having the other that Sergio will put inputs in for both. So it'll accept either Russell, but you have to have one. Now the CQG data feed that comes in free gives you a Russell feed, but I pay for my Russell feed is I like the RTY better. So I spend $20 a month on top of the Kinetic, which is $15 a month, 50 for the 500 tickers. And I'm just telling you what I do. I spend $20 to get an RTY data feed off Kinetic. But you don't have to. I believe CQG gives you one of the two, but I'm not positive on that. But you do need one of the two Russell feeds, or you're going to run into trouble on the E-mini quants and the NASDAQ quants and all the other quant lines. I'm sorry. Walt, we enter the market. We take a stop order, but it's a market order. So we have to be very careful about entering about slippage. But remember, if you enter a limit order and you don't get it, you're going to jump the trade and you won't get in at all. So I would rather take the trade and get a tick of slippage. The key is and I haven't been quick about doing it, is to get that first target. If you take a tick, move it a tick closer. If you get 2 ticks, move it a tick closer. So your risk is the same. You've got the entry. And what I've noticed also, and I haven't gone over this, is that when the market's flying, it'll rocket into your trade, sometimes give you a tick of slippage, and then it pulls back 2 or 3 ticks. What we may do is take the entry on the pullback, which we can configure. I don't want to get too complicated because we have a really sophisticated trade entry tool that we built ourselves that comes with the full program. And I'll just bring it up really quickly because it's so easy. I'll just show it. I'm not going to turn it on, but it's right there. So what we can do is we can program, and what we may do is program a 1-tick pullback. So it triggers on the entry and then takes the pullback signal. I have to see about that, but that's a possibility. Yeah, RB, we have like 400 videos. You'll learn really fast. Okay, auto trades today, Rick. I'll tell you what they are. I already have them. Sergio, did the auto take any more than the 3 we have? Hang on 1 second. I'll tell you right now. Now remember, this is the first week, and I asked you to keep it on sim because the auto took a trade at 8:25.11, and it was a loser, but it should have been a sensor trade, and I'll show it to you. And what we're doing is we're finding tiny bugs because the coding is huge, and I'll show you the trade, and you can see why it should have been censored. Here was the first trade. It was at 8:25. That was right here. Here. But you see, it's got, wait a second, 8:25. It was long. Well, you see, it's got a red dot. It's an X above it. It failed, and it's just a trade that should be censored. We forgot to make the program in when the 2 dots are different in color. So Sergio just coded that in. You see, it had the intermediate and it had the major. The 3 line was in the right direction in real time. It had the oscillator entry. It had the green dot, but it had the red X. And that means no trade. And it took the trade anyway. So that was a loser, but it shouldn't have taken the trade. Then it took this trade at 9 o'clock, right here.
Where's it? Right here. And this trade just made it right here, went 6. And then it took a trade. Now, if you got slippage on that, it's a little bit of a problem. And then it took this trade on the E-mini, which was a beautiful trade, at 934, right here. Is it 930? 939, right here. Now, in real time, believe it or not, the quants worked. And there was the entry right here. So you see how much it changed when we closed and opened. But that was a valid entry. And if it wasn't, I'd tell you. And that went 4 points. And that made $350. The Crude trade made 270. And the Crude loser was a full loser, but it shouldn't have taken it. Those are the only 3 that Sergio's given me on a piece of paper so far today. And the one loser was a censored trade that should not have been taken. How can I add back the number of contracts to my chart? Gerald, can you tell me what you mean by add back the number of contracts? I'm not really positive what you mean by that. Okay, he means tiki, I think. I don't know what tiki is either, Mark. I'm sorry. Gerald, at the end, I'm almost getting to the end. If you can just make that a little clearer for me, I'm good. Oh, on Thinkorswim. You know something? I don't know how to give you any tick metric. Oh, I see what you're saying, David. By you're looking at the number of ticks crossing, you're getting a good idea too of how active the market is. And that stands to reason that the number of ticks crossing and the number of contracts crossing is probably going to be directly correlated. I agree with you on that. Okay, I don't know what the Dow Tiki count is. TIKI count. I don't know what that is, Mark. No, William, our goal is to eventually get it onto Bloodhound. I know. We've been saying that for a while, but we've got so many people asking us to get on different markets. I mean, we have a lot of people who want to go on the 6E, trade the 6C, trade the 6A, trade the 6B. And those markets, what's nice about them is the Renko settings are all the same. The correlative markets are not exact, but they're similar. So if we can get one of them up and running, we can get all of the currencies added to the workspace. And we're going to make it Bloodhound compatible. It's not hard. And Sergio can do it. He just needs to free up the time. Believe me, we're going to do that.
Okay, what's that?
Any other autos besides these 3, Sergio?
Oh yeah,
Okay.
it's like, I think only one of them went out because I forgot to disable. What was the last one remaining, right?
The last one you gave me was at 9:39.
There was another one on CL, 125.
Okay, hang on. Well, okay, that's past our time.
Yeah.
Anything?
No, anything on time.
Okay. There was nothing before 11:30 p.m. a.m. Eastern. No other auto trader trades. Okay, the 3 lines, JT. Here's the. It's not that much magic, but what we've done is all the 3 line. The 3 line is right here. Let me find it. It's right up here. You see the 3 line V2, but all 3 of the lines are made transparent and they're stuck inside the data of the candles. So they don't bother it because the only thing we care about
is the candle halo, because the candle halo shows us when the 3 line is aligned. Now I could show it to you, but this is all that matters. And I'll show you how you format it. Here's the 3 line. Now here's the visuals. When the 3 line is aligned to the downside, you simply choose a color. I choose gold. When it's aligned to the upside, I chose blue. And so that's where my candle halos come from. Then you go up to data series and you open up the candle outline and you open up the wick. And if you want, you can make it 5 and the wick 5. And then you're going to get really thick halos. So all you really need to see are these. I would go to the trouble of making the 3 line show its color, but then I'd have to move it out of the first data box, because then it would interfere with price and it would just make the chart a gigantic mess. All that you care about is the outline of the candle, and that gives you all the data you need right here. Now, I just want you to know, everybody who's been working with the program, is that when you close and open the platform, it's going to change because it's a fractal indicator, and because of the way NinjaTrader codes its indicators to project, these are fractal, the quants, the 3 line is fractal, it changes everything. So you got to keep it open if you want to see the live data. So everything that's been open since we started the webinar at 1 o'clock is live, like around 13. These are all real candle halos and the accurate dots and the accurate 3 line. So you see why this is such a stellar entry right here live. Of course, it's getting crazier on these buttons because you have the intermediate, which is mandatory, the major, which is nice to have, the candle halo, both sets of dots. You go all the way to here. Can't trade here because you don't have the 3 line. This is haloed black. You enter on the next candle. See the wick? There's your pullback. You've got everything. Down you go again. That's why this right here, no 3 line. Can't trade. Now I might have rotated everything. I think I switched this to another inch. Oh, I switched it to the Qs. So it did rotate everything. But that's why you don't see the 3 line, JT, because we made it invisible, because all that matters is the candle halo. JT, that's what that's the only piece of information I don't divulge, because it's so hard to get the correlative markets. I'll tell you, one is natural gas. I'll tell you that. The others were difficult. And the correlation coefficient is just 0.7. Now, if it's less than 0.7, it doesn't work. And that's just math. 2 markets have to correlate at least 70% of the time, or the value or the information they give you isn't specific enough to use it. And we're hovering right at 0.7, except for nat gas, which has a really strong correlation coefficient with crude. Otherwise, we're right in the ballpark, and they're very tough. Again, Tim, if you have it on 1, you have to have it. Here's what you do. Just go to your indicators and scroll down to the RL Uni section right here and go to RL Uni here, RL Uni V. Click on it. It'll come down. Hit OK.
and you got it. That's all you got to do. I'm going to remove it because I don't want to, but just go to it, click on it, bring it down, and hit OK, and you're good to go. Now, other markets, David, if this nothing uses its own market. If the CL dots were based on CL, it would have no predictive value at all. Because when CL went up, the dots would go up. When CL went down, the dots would go down. And you can see here that sometimes they don't go in the same direction. You're going to see, let me show you. See, here's a move up with no dots. Here's a move down with green dots on the slow, red on the fast. Now, you want them to correlate. So you want, when crude goes up, for the dots to go up in general, but there are periods of time where they don't. Like here, there are no dots for this extended move up. And if they were just clocking crude, every time crude made a few ticks up, you would get the green, and you don't. And there are times when crude, like right here, see how crude makes these multi-candle moves up? The dots stay dual red, which tells you not to go long. Take the roll. Here the dots stay red. Here you get one green fast, but that slow dot stays red. You look for the roll. Here the dot stays red. You look for the roll. Here the dots red. No dots up here. Look for the roll. If they just traced out the price of crude on these right here, you would never get this long extended crude push up with these dots still laser focused to the downside. That's what makes them so important. When you get a retracement to the 50 and you want to think you're going to take a counter trend trade and these dots don't turn, you don't even think of a long trade. And if one's red or one's green, you got to just stand down. Like right here, you got one green and one red. You can't take a trade here. You got to wait till they come in line. There's an auto trader already created, Harold. It's been running now for a week. We just started it. Everybody, we've got a lot of people on it, and it's banging out a lot of winners. The only losers so far, yes, on Monday it took 5 winners and 1 loser. And the one loser it took was a censored trade that hadn't been coded correctly. Yesterday it took 1 loser and the loser hadn't been coded correctly. Today it took 1 loser and 2 winners and the 1 loser hadn't been coded correctly. It was the first time it had a red dot and a green dot on the same candle. And that's one thing Sergio forgot to code. He tried to think of everything, but it's got so many independent variables. It took the trade looking at the candle, that the dot in its favor, not looking at the dot against it, and it was a loser. It shouldn't have taken the trade. So now he's fixing the code. So in the process of just tweaking the small things, but if you just look at the valid trades, it has not taken a loser yet this week. Every valid entry has worked, and all the losers will never occur again. Like if you get a red and a green dot on the same candle, will never give you an entry. Yesterday, it traded right into support. Now that should have been coded, and Sergio took that out, and it took a loser, and it did something funky on the 6th trade on Monday. It had 5 winners in a row, and that's been coded out. So that's why we don't want anyone trading live, because eventually we'll have covered everything and it'll trade smoothly. It only takes the most conservative trades, dual dots, oscillator signal, quants, background bias,
It's not looking for a lot of trades, just a lot of winners. And Monday it took 6 trades. Well, 5 valid trades and 5 winners. So we do have an auto. No, we're not going to Mercedes. No, we're not over-engineering it. This is all we got. We're not adding any more. The only thing that we're going to add is that one signal when everything aligns and sort of gives you an auto trader entry. And that's what we're going to put on this workspace. And it's not that hard to do because Sergio already has the code on our server in Chicago. So we just got to move it over so that you can put it on your computer. And we're going to do that as quickly as we can. Then you don't have to think so much, actually. You still have to think some, but it's going to do about 90% of the thinking for you. So, but remember, the trades it takes are going to be limited. Only oscillator, only 100%. It doesn't counter trend trade. It won't take a continuation trade. So it does limit you, but the trades that it signals are going to be awfully good. Otherwise, that's it. We're not adding anything more. Listen, we tried to add the cash metrics, and they just don't help. So they're gone. So I don't want to put anything on here that doesn't help our trading. You know what, Ron? I agree with you. I've looked at doing that, but let me tell you, order flow on any individual candle is so variable that if you don't put it into a moving average, I don't think it has much predictive value. We have the data, and we used to project it into every candle. We did it for like a year. We had the buy, sell, and balance on every candle, the market delta above every candle. We had a moving average of the market delta below, but I didn't help. Only when we took the delta of the 2 higher unit Renko settings, put it in a 15 period, and created an order flow line did it have forward-looking predictive ability. Because all of that information is in those candles. And I mean, I cried a little bit when we took it out because it was such a big deal. And we spent so much time working on it. And if you hang on a second, I think I can show it to you. Let me just see if I can. Because all that data is in there. I'll show you this. We have everything. See, here's the settings on our market profile. And our market profile had it. We had a candle histogram. We had a candle point of control. We had every single buy, sell, and balance. We had a market delta for every candle. And we just took them all out. So I personally don't think it's going to help you. And I know people do order flow tracking, but then somebody throws in 1,500 contracts and it throws everything off. So I don't know, Ron. I just don't think it's going to be helpful. Thank you, Brian. I appreciate that. The way we're all going here, we're all going to need brain surgery in about 2 weeks. So would you call them up and tell them we got 3 people we need covered? Yeah, yep, Jeff is right. The NQ has a lot of bots trading it. They scalp it. They jerk it around. It's very choppy and fast. I have an NQ chart somewhere, and I lost my YM. I lost my NQ, but I know when I looked at the NQ and the YM is easier to trade. The NQ, even on a 4 Renko, is very, very tough. It'll spit out 20, 25 ticks like nothing. Thank you so much, John. Algo today, I told you more. We had 3 trades, 2 winners and a loser. The one loser was a censored trade, and it shouldn't have taken it. and I gave you the times and the profits. First trade was at 8:25, 8 hours, 25 minutes, 11 seconds. That was a censored trade, lost 400. Trade number 2 was at 900 hours, no minutes and 6 seconds. It made 270. Trade number 3 was at 9:39, 9 seconds. It made $350. It was on the E-mini. Those are the only 3 trades. It had nothing later in the afternoon. What I'm saying, Stephen, is that if the volume number in the right is very, very low, it's very, very dangerous to take a trade. Well, here's the thing, Steve. I don't think we should gray the background on a low volume, because there's certain times when maybe it's not horrible to take a try. All it is another variable associated with risk. I mean, there's never anything that says we're never going to trade. It's simply like, look right now. Well, it's 4 o'clock. Here's where the market wound up closing up just a little bit above its open. And I think the close here is screwed up here, because now it's generated a new close, I believe. But nothing ever tells you don't ever trade. So that's not so. That's sort of a censor, and I wouldn't really want to do that. So I would just trade with extreme caution in a low volume environment. And the thing about crude is, I've seen trades where you take the entry, and then all of a sudden the crude just rockets, like somebody put a lid off a bomb and it blows down like 11 or 12 ticks. So it's just another variable you have to be cognizant of when you take a trade. The only indicator on here, on the E-mini, where you can't trade is against the 3 line and without the intermediate. You can't trade on crude without the 3 line and without the intermediate, and either the major or the minor, or the major and the minor. You cannot trade without those. And if you try, I think you're going to really wind up in trouble. So that's the thing, those are the things I would take home as to what it is. Don't ever trade without the 3 line in your direction and the appropriate quanta line. Just the middle on the E-mini, and the middle and any other on crude, or without the middle, the top and the bottom. And remember, these are all the same correlative markets: fast, intermediate, slow. So you can have the fast and the slow, and the intermediate, speed, and any other. And you've got a crude trade. Without that, I would not take the trade. Larry, the dots on the oscillator, those are just every candle forms a dot. And when the dots cross the cyan line right here, which is the 50 line, you get a down candle, a down triangle. That's the cross of the oscillator to the downside across the cyan line. When it crosses above, you get an up triangle. Now, our big, hefty additional indicator we're going to make is going to anticipate all this, and it'll be coded in. So it'll anticipate a triangle, the 3 line, everything, just like the auto does. Only it's going to be on everybody's computer, unlike the auto, which is on a central server and sends out the signals. I did those, Rick. Okay, Hala. My pleasure, Hala. Sure, it's going out, Mark. No, they're here. The number of contracts crossing right here, Mark. Right here, Gerald, 472 here, right here, 41. And if your platform, they disappeared, just give Sergio a call tomorrow, and he'll fix it. But they should display some number all the time. The number can be locked at, and not trading at all, but it should have some number. And sometimes if that happens, if you close and open, you get it right back. It's just NinjaTrader being NinjaTrader sometimes too. You're going to get an update, Fitzroy. The update is going to have everything updated, including the Crude dots coming out tomorrow. I know, Fitzroy. I started this at 1. It's 4 o'clock. I've taken airplane tonight. Brian, 7:30 in the morning. The Auto Trader optimal 7:30 in the morning until 11:30 in the morning. You're going to get a considerable number of winners. The signals are going to go 24/7, but if you let it go into the afternoon when volume sinks, then you're going to start walking into trades that don't follow through. When it took 5 winners and a censored loser, took them all in the morning. So it really should have had 5 winners and no losers. That hasn't taken a valid loser yet. No, James, there's no discretion on the auto. The server is in Chicago. Everything's been set. The only thing that you can alter is the number of contracts you trade. And if you want to change your automatic trade management strategy, you can. But the entry signal and what it looks at to take the signal is determined by that central server. So you can't change any of that. But once the signal hits, how the trade evolves is up to you. It can evolve on 1 contract or 10. You can take, whatever targets you set up, we configure for you. So you have that discretion. Yes, Ronald, you're going to get a signal that's going to give you the same entry as the auto trader. It's coming, and it's, maybe a week to 10 days away, but you're going to get that, and it's going to look at every single independent variable we trade, and you're going to get that and we're going to get that on our charts. I would execute the trade. If the auto trader is going to take it, it means every independent variable is aligned. The 3 line, the quants, market structure, price action, the dots, the 50, the whole shamil. So I would be very, very hesitant not to take that trade, Ronald. Great, thank you, Mercedes. No, this is it. I mean, I think we've gone as far as we can that's reasonable and rational. And also, we're always going to have some discretion. I mean, we can't make this a non-discretionary system, because if you do, it's impossible. You're always going to have, because everybody has a different degree of risk tolerance. They're just flat out bad trades. But within that 10%, some people will take the trade and some people won't, and they're not right to stand aside, and they're not wrong if they take the trade. It's just a matter of personal discretion. Thank you so much, Ken. Ken wrote, Mark, I've been trading for 18 years now. I work with some nice software, but nothing has the forward predictability as a system. I like the speed of the 2 Renkos. You truly have the best system available, and I appreciate working with you and the team. Thanks so much. Ken, I appreciate that a lot. And you ain't seen nothing yet. Wait till our big signal comes out. And we're going, if you own the full system, you're going to get all the additional add-on markets. So you're going to be getting all the currencies and everything. Well, Cliff, you know what? What you do is you have to remember, Cliff, only look at the trades that on the auto from 8:30, from 7:30 to 11:30, and we've been posting them and sending out emails. Now on Monday, it took it took 5 winners and a loser, and I looked at the dome myself, and the one loser was a sensor trade. On Tuesday, I can't remember. I don't want to say for sure. I know yesterday it took 3 trades, 2 winners and a loser, and the loser was censored. And today, the same thing. It took 2 winners and a loser. The loser was censored. This is on that period of time. If you're trading it after 11:30, it's going to start to pull in losers because volume is going to die. But if you send me your back end, Cliff, I would be willing to bet dollars to donuts. Now, there was one trade yesterday. Actually, that's the trade. Sergio triggered it by mistake on his own, from his own computer, working on the code. And that was a loser. The system actually didn't send it out. Gerald, if you lost it, just call Sergio tomorrow. He'll fix it. It may come back when you open and close. My pleasure, Ken. Thank you so much. No, we haven't sent it out yet, Cliff, because I'm still here working. But take a closer look, and Rory will send out the 3 trades that went today, and next to the one that we're going to show you the loser. We're not going to make it vaporize, but when you take a look at it, you're going to see, and I showed it to you. It's the Crude trade has a red dot and a green dot sitting on it. And it didn't know how to handle the trade. It's right here. And I'm sure you got it on your computer. It's at 8:25. It's right here. It's this trade. It just didn't know what to do with the trade. It was like it went into meltdown, and it just took the trade right here. And you see it's got both the major, the intermediate, right, the appropriate background bias. The 50 is green. On real time, the 3 line was in the right direction. It's far enough away from upside resistance, except it did not know how to read the fact that there were 2 colored dots here. So it just saw the green dot and took the trade. Never should have taken the trade because it still had the red dot. So the trade rolled and down it went. So that was the losing trade. All right, well, listen, everyone. I'm going to go. If you don't have the system and you'd like to get it, just give us a call. I mean, the truth is, eventually we're going to start selling it by clusters of markets, and we're not going to give out. It's so much work because we have so many packages, and eventually we're going to have, I don't know, 7, 8, 9 markets. We're going to have the Forex on 12 pairs, and we're going to have multiple stocks configured. So it's going to be such an enormous amount of work. We're never going to sell it as a everybody gets everything anymore. You guys have done it. You got it. We're never going to take that back from you. It was our promise, and we're going to get you all the markets. But we're not going to continue that because it takes so much time to code and for us to work on each additional market. But we are still moving ahead with it, though. So, and everyone who's in it has got it. So that's all I can say, except that, look, I won't be here tomorrow. I'm real sorry about that. I very rarely, I don't think I've missed 2 sessions in a row in 5 years. But I do have to leave, and but I'll be back on Monday. We'll trade all week, and if you have any questions, Rory has to leave too, and Sergio will be here all by himself. So be gentle, but we'll be, I'm going to monitor the emails. Rory will monitor the emails. We'll respond to anything that you have, and if you call and you don't get through, just know that it's Sergio alone and he's on the phone. So have a great afternoon. Monday's a holiday. Thank you so much. Thank you. I really appreciate. Is Monday a holiday? Oh, Jesus, you're right. Hold on a minute. All right, you're right. We're not going to be here on Monday. So we've got tomorrow and Monday, and it'll give us I can't ask anyone to work on Monday because it's a national holiday, but Sergio will be here tomorrow, and Rory comes into the office almost every Saturday. So I'll see everybody right after the holiday. Have a really happy holiday, and let's make post Memorial Day a really lucrative period of time to take these trades. So have a great afternoon, everyone, and I'll see everybody on Tuesday. Take care, everyone. Bye-bye. We'll send this out as a recording. Take care. Bye-bye.